How does it feel? 1 year down the line, IL&FS is behind us. Does it feel like 2076 can be better than 2075?
Hi, Lata, and happy Diwali to all of you. And on behalf of all the investors of the Lal Street, may I wish your audience that the lights of Diwali will illuminate their future. I think it's very important that we remain optimistic. We've had a good year. Last year it was up 10%, but a lot of retail investors felt the pain because their portfolio was underwater. The small and mid caps were under a lot of pressure. But for the first time in the last 2-3 years, Lata, I'm noticing that the market is fighting back. I think bad news doesn't mean the stocks keep going down. They fight back and bounce back. A lot of stocks, even in the small and mid-cap areas, have moved higher. So I would like to think, as you're suggesting, that perhaps the worst is over, and this Samvat will bring us, much greater and gladder tidings.
Ramesh, hi, good evening. Happy Diwali to you and your family. And just give us some thoughts on, what would be the areas of strength for this market. It's been very narrow. 5 or 6 stocks have led the market. As you said, this year should be better. What do you think would be the key areas of strength for the market?
I would suggest to you 2 areas. I think a lot of analysts over this Diwali period have turned bullish on the public sector stocks. As you know, I've been vocal about them. The point I was making, which my son has emphasized to me, is that if you really believe in the Modi government and you believe there will be better corporate governance and there will be better government, you cannot be not bullish on his companies. And I think the fact that he's willing to privatize these companies, and I think all players now believe that VPCL, for example, will be privatized by March 20, suggests there's a whole exercise in value unlocking that's taking place. And once that one domino BPCL falls, a whole host of other dominoes can fall in the public sector stock. So one sector which offers value in 2 respects. One would be the privatization candidates. One would be the candidates that are not immediate privatization candidates, but still look very attractive on an earnings basis, on a yield basis. The defense stocks, the railway stocks, they look fairly attractive to me. The second sector I would look at, and increasingly, is the telecom sector. I think there's so much bad news, but you have to remember that there are only 2.1 players left in the market. The 0.1 is probably in a deep set of trouble. So you want to look at the sector. I mean, in a country like India, you will have 2 players who will survive. And if there are only 2 players, they will have some pricing power. So I think the worst seems to be behind the telecom sector now. So I would say that while there may be a plethora of opportunities in small and mid caps, and investors should look at them also, they should also look at these 2 sectors, because I think this somewhat would be, a lot of value unlocking in these 2 sectors.
Okay. Ramesh, hi, good evening. Happy Diwali to you. You started by saying that the worst is perhaps over for the economy and for the markets. But do you reckon the worst is over for earnings as well? Because, I mean, that's the sense we're getting. If you look at a lot of the large cap names, whether it's an HUL, whether it's an ICICI Bank, or Tata Motors, it at least seems like there is a bottom in place. But you correct me if I'm wrong.
No one really knows. It's been a very, very long, dry, painful earnings season. But the market, as you know, Sonia, typically looks 6 months ahead. So it's forecasting something that perhaps we don't see right now in the earnings coming out this quarter. As you said, some of the movements from unorganized to organized sector are doing very well, but the rest of the market is languishing. Hopefully, you see, the thing about capitalism that I like, that nothing goes to zero. The pendulum swings one way and then the pendulum swings the other way. So I think it's swung too far in terms of low corporate profitability, poor earnings growth. I think we're now ready to come back from the low base effect and show some positive surprises over the next few quarters. I don't really look at aggregates as much as some of the other analysts do. I tend to look at individual stocks. And when I meet the managements of my company, they seem to suggest that they're already cheap. These stocks are already cheap, and they feel more confident over the next 6 months, 9 months than they felt in the previous 6-9 months. So, I'm always optimistic, so I do remain optimistic, Sonia.
Okay. Well, Ramesh, you have always left us with something new that you spot on the horizon. Anything that is looking interesting for you now? I mean, you gave us in the big stocks. Is there any a specific area that is looking interesting? One remembers your United Spirits call. Likewise, is there any stock that is looking extremely interesting to you?
I mean, there are. I think telecom would be a nice contrarian
Yes,
call.
of
I think
course.
there's not many players left in this business, and so that would be a contrarian call. The small mid caps, as I think many other people have also mentioned to you, is not a thematic play that you buy a sector of the small cap stocks. In fact, you have to do bottom up stock picking in there. As you know, regulations prohibit me from speaking on individual stocks, but some of them are really attractive, a very attractive valuation. And I think if they survive the next 1 year, 2 years, these companies will give you manifold return over the next 5 to 7 years. So I think on a case-by-case basis, you need to look at companies in the paper sector, in the paper sector, companies in auto ancillaries, where I'm finding companies are trading at cash value with very handsome dividend yields. Maybe perhaps even some media is time to look at media stocks again. The thing, Lata, that most people don't understand on the stock market is that you're trying to beat the intrinsic value of a particular piece of business. And the intrinsic value is, so particularly high, but the market value is so low. It pays to invest and be patient in these things. Before I came here, I read somewhere that, in an investor's experience, expenses always compound, but the income doesn't compound so long because you break it due to various reasons. So I think for successful investors, particularly at this time of deep draft and deep pessimism in the market, is to latch on to some great businesses and hope these businesses compound over long periods of time. That they will compound out of 6 months or 12 months, I don't know. But I'm pretty sure that over a long period of time, which I would say over 3 to 5 years, these businesses that today are available at cash value, available at high dividend yields, will probably return superior returns to investors. So this is not, we always said that, but this is perhaps a good time to get in. And, as long as they're good basic businesses giving a good dividend yield, it's remain optimistic. The way to make money is, when it's raining. You want to buy your raincoats not when it's raining, but at time when it's not raining. So, I think it's that kind of time right now.
Sure.
In the last 3, there's pessimism. People are looking away. Mutual funds are facing some redemption pressure. And especially with the small cap and mid cap sector, there's a deep, deep pessimism about these sectors. And in my opinion, that's all rubbish. I think these businesses will survive and thrive over the next few years. And other than the large sectors I told you, which is the public sector and the telecom stocks,
Got it.
I would look at a basket of these small cap and mid caps
exactly.
without fear.
Exactly. Which is what you did, Ramesh, last time, right? In the QSR space, when there was so much pessimism and you were very bullish, and some of these stocks have now given handsome returns. Is that play still on?
Could you repeat the question?
QSR.
I don't think I heard you, Anuj.
QSR space, Ramesh, you were very bullish when there was so much pessimism.
QSR, yes, of
Yeah,
course. Yeah, okay, yes. Yeah, I do. I mean, Anuj, I do remain optimistic on these stocks because, India is a young country. As more women work outside the house, as the staff at home becomes less and less reduced, as disposable income rise. It's a great theme you can play on, and it's somewhat more protected against technological change. Not completely, of course, because now you all hear of the all-vegetarian burgers coming in and automation. So it's not completely protected. But I think for the next 3 to 5 years, which is the investment horizon I'm talking about, I think these businesses will do well. And the couple of results that came out for the 2 stellar QSR players, I think were fairly optimistic in terms of same-store sales growth, in terms of the trajectory of earnings. So you're right, I would remain optimistic even at these levels on these stocks.
Absolutely.
I take your point entirely.
Ramesh.
Impossible Foods is the company I think you're focusing on. Okay, Ramesh, just one final question from my end before we let you go. Do you think that the equity cult has come back in a big way? I mean, are you seeing a lot more household savings sort of move into the equity markets now?
No, it's the contrary, Sonia. I mean, actually, it's not come back. Unfortunately, the last 2 years have been so painful for retail investors that whatever money they've left, they put into the high quadrant earnings. So that's why you have this huge run-up in these high-quality, good corporate governance stocks. My feeling, Sonia, is that the investors are throwing the baby out with the bathwater because some of the companies are disappointed and some of the companies have defaulted. They're taking all the companies with unknown corporate governance and throwing them out with the bathwater. It's a huge mistake that investors are making. Will they get back in the market sometime? Almost certainly. I mean, this thing about capitalism is that pendulum swings both ways. You go from extreme pessimism to extreme optimism. I think somewhere we're on the extreme pessimism continuum right now. So at some point, markets will realize that there's a lot of value. You can't treat disrespect companies that pay dividends properly, pay you a good dividend yield, and continue doing their business. And you think they will survive. I don't think there's a technological threat to many businesses in the next 3 to 5 years. So inevitably a boom will come, and these companies will prosper, because once the investors decide that the high quality quadrant is too expensive, they will tend to look at other sectors and say, oh my God, I'm getting good Ps, good yields, and good visibility. Let me put some money in there. So
Okay.
that's the call I'm making.